What is going on, everyone? CryptoVatsik here with another technical analysis video. Today we are going to be covering GALA Games. And just before we get started, if you do enjoy these videos, it would really help me out if you smash that like button and subscribe to the channel. And of course, nothing of what you're about to see is considered financial advice. Alright, let's take a look at GALA Games. And first thing we're going to do is flip to the logarithmic chart. Okay, so as you can see, there's a lot going on in this chart. But let's break it down step by step and keep it simple. First things first, let's start with the exciting stuff. GALA Games is currently at over 100% ROI on the current weekly candle, which has been an extremely bullish move and is really foreshadowing a large bull run on account that we have now flipped this baseline resistance into support now at this point, slicing right through our January high in 2023 and now just visiting our August 2022 high from over here and over here. We are coming, however, up to our active high time frame resistance, which I really believe is our final resistance until we enter what is called our expansion zone, where there is little data to provide that would signal a significant resistance within that price range. Therefore, I think GALA has some work to do still on the current price range that we are trading within. So you can see that we are currently just coming up to that active high time frame resistance, which also sits on our 100 exponential moving average, the thin gray line here. This is the first high time frame interaction with that EMA. And so it would be very logical to assume it as resistance or a form of. If we ignore the prior highs from January and August in 2022 and 2023 and just bring our attention to this flipped support baseline in the green box, this was a zone where price established support for a substantial amount of time, and the vice versa, it respected it as resistance for a substantial amount of time once it was flipped to the downside. So yes, we have put in a serious bullish leg here on the current weekly candle. So it would also be a logical, reasonable prediction to say if we get a macro correction that we could see price trade down towards that baseline before bouncing. I personally think it would be unlikely, or it is not the probable scenario, that price would slice right through our active high time frame resistance. Therefore, I'd expect some form of a consolidation over the coming weeks before entering our expansion zone. And it's much like we had previously. Down here in this rectangle, that was our prior area of a baseline. Price tried its best to maintain that level as support all throughout this time here. It's about 6 or 7 candles until it was lost and then quickly reclaimed. Further to that, when we corrected over here, we came back down, wicked through it, candle closed inside, put in some further bearish consolidation in this rising wedge until we dumped obviously back below that level again. But you can see the reaction and the respect that price is giving that zone. When we had our micro MS breaker here, which is a break in bearish market structure off of this trend that we had, the downward sloping trend from all these highs stemming from this bear market high. Consistent taps on the way down with these bearish rising wedges on those legs down. Well, you'll notice really subtly at the bottom of that leg, the last leg, price broke outside of that trend with an upside retest, breaking that bearish market structure with a fresh new high. So that was our very subtle trigger 1, and then the more obvious trigger 2 was our macro market structure breaker here, which ultimately made a macro higher high in comparison to this macro lower high. A strong, fresh, new high made with a swing fail, but then you'll notice we came right back down and retested this baseline again with success, this time in acceptance as support. So essentially, this price action here that I'm seeing, I am assimilating it to this price action that we are currently seeing right now, where price sliced through that resistance baseline, and baselines are essentially just where price respects a certain level or a certain price range, and it can be either as support or resistance. It doesn't have to be one or the other. It's just where a price likes to step in with volume and has a significant reaction at. So when you're below that level, you expect it to be resistance, and when you're above it, you expect it to be support. So when we flipped that baseline with this breaker leg right here, getting us out of that bear market, it was only natural to assume that baseline as support on account that we got those market structure breaks, micro and macro, And now what are we seeing? We are seeing the next baseline area that I had marked out where price likes to interact at either as support or as resistance. We have sliced right through that at this point on high time frame. Therefore, it's perfectly logical to assume if we get a macro correction, a significant correction, that area would be our next probable target for a corrective bottom. So as I said, we've had a major push on this weekly candle up to our active high time frame resistance, which again, I think is our kind of final resistance until we start really expanding. We have nearly broken every lower high during our bear market. In fact, we've broken this final lower high, we broke the second lower high, and we broke this first lower high. So we have essentially absolutely confirmed the bull market. I don't think that's a surprise to anybody at this point, but it does mean you want to start paying attention and getting involved if you believe in Gala long term. If you haven't already accumulated, now's the time to start watching for those next corrective legs to consider getting involved. As I said, I think that we will probably see some chop at the very least in the short term with a very expansive move in the longer term. If you zoom out, you don't see much data to suggest that there's significant resistance before we come up to this consolidation zone, which I've called a consolidative area just because there's no clear shelf to work with as we marked down here, a baseline. Yes, there's clearly resistance up here, support down here, and so forth, but all that looks like to me is essentially a range with your high, your lows, and equilibrium, which is very different than a baseline that is set over a period of time. So I do expect price to chop around in that consolidative zone. Not sure exactly where it will top out at or where it will begin its consolidation, but I do expect it would be somewhere underneath these highs marked out by this dotted line here. But the area between that consolidation zone and our current active high time frame resistance is a bit of an air gap in my opinion. We'd be trading above the 100 EMA. We would have broken out of our bear market ceiling and we would take up all this inefficiency in price that you see here. So there's a couple different scenarios that I see playing out. The first one is the one that I am leaning towards, which is to see a correction in the short term off of our active monthly resistance. So in the following week, we may see another candle that looks very much like this, but we would be trading within my active resistance zone. So at that point, I would expect a correction, which could be possibly violent, but the vice versa would be a violent reaction to the upside thereafter. It could take a week, 2 weeks, 3 weeks to play out and could come down as far as this green flipped support baseline, which sits at just over 4 cents and then leads up to just under 5 cents. It is possible also that we get front run and price does not meet that level and perhaps just consolidates and tests this prior January high that we had last year. The second scenario would be is if this completely goes vertical and price in fact does something like this on the following week or two, then in that case I am looking at our active high time frame resistance block in red to act as that probable retest zone, which would mean it turns green as a support zone at that point. But that will have to be proven, as in we would have to break through that resistance with confidence, much like we've just done with this zone down here, which was previously red, but now is very clearly a green zone with this substantial confident move, violating it as resistance. So that is scenario 2 if we do get something like that. I think once we flip that zone and we flip the 100 EMA, we enter this expansion zone and price really takes off at that point, leaving a lot of traders and investors sidelined potentially, with the next area of opportunity being within this consolidation zone, which I know is a very large zone, but it's based off of range highs and lows and historic data versus oftentimes when traders will mark out really precise levels such as this and they say, yep, price is going to top out there and then I'm out. And then price actually does something like this and loses it, or it does something like this and flips it. So in my opinion, it's better to work with zones and it's better to be flexible and be okay with being wrong. There's a couple ways of anticipating targets and to each trader it might be different. I don't use this technique all the time, but I find it very useful is the FIB extension, where it marks FIB levels based on the FIB extension and correction and provides those FIB levels for you. And you can see right off the bat from this previous leg that we had to get out of the bear market, we see all these fibs marked out for the next following leg. Well, you'll see that we stopped out pretty much at a 1-to-1 extension of this prior leg. meaning that this leg was a 1-to-1 ratio or equal in length and size to the first initial leg, which is very typical in crypto out of the first leg, getting a 1-to-1 extension. However, you'll notice that the correction was very brief and very quick, leaving you a short amount of time to get involved, but it did come right down to the 618 fib on this correction wick. So there are signs in here to show you where price could potentially top out at again. And so we start to look at the 1618, we look at the 2618, and so on and so on. So personally, for me, the 2618 is the most logical topping out point or temporary top for price to have a corrective pattern. It doesn't mean it has to happen, and if I'm wrong, I will adjust accordingly. And then following this extension, we would be doing the same exact method on our most recent leg. So from the base of the leg to where it ends up topping, and then to ultimately that correction bottom. Now this may break some Elliot Wave theory rules, but I find in bull markets it does work on a macro scale continuously over and over. I won't get into the Elliot Wave theory, but again, just for reference sake, looking at the 1-to-1 extension and then the 1618 and so on as potential targets, but using other justification and other data such as marking out active resistance, marking out the EMAs, marking out prior highs to get those more substantial levels of confluence. If we drop down to the daily quickly, we see price is continuously putting in this major push to the upside. So if we put in a form of a high soon, then again, I'm looking down towards that equilibrium as a potential retrace target, back down towards our green baseline zone here. Even if we deviate somewhat above this range, I will take that market structure break as the range high and consider this a deviation, but ultimately again looking back down towards the equilibrium of the range and maybe a deviation into our green baseline before moving back up. Again, plan B is if this slices right through our active resistance, then essentially applying this method on a lower time frame range that we can find, looking at the FIB extensions again, but ultimately looking at that high time frame resistance area as a potential corrective target. It will not be confirmed on a slice with a candle wick or with multiple candle closes inside on high time frame. I think both of those scenarios quickly reverse down. I will only consider it flipped on high time frame, multiple candle closes above, and that's the only way I will consider it a true flip of the level. Anyways, I'm going to keep it there for today, you guys. There's a few different scenarios there for you to work with. I hope this video has helped you in some way, and if it has, please don't forget to smash the like button and support the channel by giving us a follow. Trade safely, trade objectively, and we'll catch you guys next week. Thanks for joining. Adios.